Wake up. It's Monday morning, everyone. Pre-market model trade. Spools away from these 8:30 relatively legal highs, trades into a bullish order block, gives us a run higher, institutional order for entry drill, plus bullish order block, trades up, and then down back into this. Body closes above this miniature fair value gap. That's a sign of strength. There's a breakaway gap around 40% in the range, and it runs all the way up into the 8:30 a.m. opening range. Unfinished business, relatively legal highs. Light work. Okay, buyers for the day. If you've watched the weekly outlook, I want to be bearish this week. I did say I wouldn't be as sure if we get a gap up Monday morning, and then we've gapped up 106 handles Monday morning. So a little bit annoying, the bias in that regard, but I am still leaning bearish if I had to pick. And the 4 hours just goes completely against that, so I'm neutral. Hourly chart was still around the daily bearish order block. If we can take out this high and then reject it, body closes beneath that high, that would be good enough for me to maybe start considering a short bias again. But currently I'm going to remain neutral, and I'm just going to be using levels like the pre-market high levels, the pre-market low levels, the opening range gap levels, this PM buy side liquidity, which I'll do this Friday PM BSL. And then as you can see, we've run and overlapped the entire London range in that pre-market. We also took out the initial buy side in London. That gave us a run lower. We've got this 15-minute bullish order block. I really just want to see what it's going to do at the open, and then I'll decide the bias and where it can trade. For now, though, although I'm bearish on the week, I'm not bearish at this very moment. I want to see, because the 4 hour looks temporarily bullish here. It looks like it wants to take out this high, and until that happens, is it gonna just reject this? Is it gonna go higher? I don't know. It's kind of 50-50 for me, so neutral until we get more information from the New York Open at 9:30. 4:14 or regular trading hours closing price on Friday was 24,324, and we're currently around 24,533. So about 210 handles. Obviously that can change in the next 7 minutes. We'll just have to wait and see what the opening range gap, the first 30 minutes of trading, what all those do, and we'll decide it from there. What's up, number? What's up, buddy? And this grey box is our daily bearish order block. Daily bearish order block. And you can see the level. If you're wondering what all these lines on the chart are, they are from the 13th of October's new week opening gap. The Friday premium wick, I've also graded that. Those are the green lines, the green dotted lines. These thicker ones, they will not show up on the lower time frame chart. They're just on the daily chart only, so that's not on there. And then the last thing is the new week opening gap from today, 24th of November. New week opening gap levels, 6 o'clock's open, 24,455.75, and 4:59's close, 24,349. And this is the grades of the 13th October's new week opening gap. 5 minutes until market open. This is our pre-market high. Pre-market lows look real nice, relatively equal. It's about a 150 handle range here. This is like the everyday scenario now, 150 handle range or more. It's rare we get a tight pre-market range nowadays, which is good. I like the pre-market. You'll also see this midnight first presented fair value gap. It's the first presented fair value gap from midnight. That's all it is. And that's this one, 0006. This entire thing is displacement, so you can grade the entire thing and then use standard deviations. But I'm not going to do that on the stream because it's too much to have on the chart. Too much. Just waiting around on a Monday morning. Three, two, four. Just a minute until market open. Like the stream. Morning, Zach. Good day. It is a good day. Good Monday. Okay, there's our 9:30 open. Okay, quite the opening range gap. Consequent encroachment, really good because it's perfectly aligned with the pre-market low. So once we manipulate buy side, potentially if we can see a reversal pattern that would allow us to trade down to the consequent encroachment, that would be a valid setup. Especially since we're above midnight and we're also above, well, almost above 8:30. There's our pre-market highs. I want to see something that constitutes a liquidity sweep of the pre-market high, and then something that signifies a reversal pattern. Hey Michael, you stream on ICT channels. Is ICT streaming? Oh yeah, he is. Nice. Okay, nice. This is what I want to see. This freezes up now to start looking for something that will trade towards the downside. Once we get a reversal set up, I'm going to use an implied dealing range, and we're going to look at 50% of the implied dealing range. Because demanding it to go all the way into the pre-market low when it's inherently trading higher is, you know, lower probability. But if this 4-hour candle can close inside this range, like below this high, that would be, that would be good for sells into the pre-market low. Until then, though, still neutral. Still letting the information print on the chart. I'm not trying to predict anything that's low probability. Boring, right? That's how it's meant to be. Most of this career is just sitting and waiting. Better than being employed. This is where I wanted to change its stay, but we're not there yet. Still 23 minutes for this candle to close, and then we can look at what technical look has in mind. Let's grade this. Alright, let's see. What's up, Otaku? What's up, buddy? Okay, if this can become an inversion, that'll be the beginnings of a potential reversal. We'll see if it wants to, though. Oh, I got my TP at yield 0.5. Good luck. Good luck. Did you buy right at the open? This is characteristic of a very large opening range gap. If it's, above 150 handles, or even above 180, and today's 200, it can play touch and go with it, where it just taps it a little bit. Sometimes it'll reach into the lower quadrant, or the upper quadrant, the near quadrant. Sometimes it'll be short of that, and it just instantly take off. When you have large opening range gaps, it's always a possibility. Yeah, you see the trade in the Discord? I'm not on Discord right now. I'll check though. I'll check. It's a good trade. Why does that happen? The opening range gap I'm gonna see me talking about. Let's go to the fresh chart. So this is the regular trading hours chart, and here's our opening range gap. With smaller opening range gaps, you'll see that they can typically reach into consequent encroachment, sometimes immediately at the open, but within 30 minutes, 70% of the time, with like a regular or small opening range gap, it'll reach into the middle. 70% of the time within the first 30 minutes. When it's a large opening range gap, that's not the case because it's such a large liquidity void. It's just many times left there and returned to at a later date. The reasoning for that, I couldn't honestly tell you. ICT's the one that told me this stuff, but I don't understand the reasoning myself on that particular thing, so sorry I can't be of much help there. But it is true, you'll see it happen yourself if you go through previous data. Why is this not an inversion gap to me yet? What's it reacting to? That busy. So until this candle closes, I'm not even gonna call this an inversion. It did wick the midpoint though. these relatively close in the regular trading hours chart. We don't have this gap on CFD. Full out of my funded though. Good. On CFD, if you just go to your 414 closing price and then you go to your 930 opening price and you do the same thing I'm doing here, you can still get the gap levels and it will still behave the exact same way, but it's just not going to be an actual gap on your chart because that's the 24 hours trading, not the regular trading hours opening range gaps. So it won't be visible, but if you take the 414 closing price and the 930 open, and you either put your fib on it or a rectangle, it'll show the same information. So if I go here from 930 and I go to 414, see how that's the same level as my opening range gap low? It's because that's the same information. So you can do the exact same thing. Yeah, you're welcome. Okay, let's call it outside of there. As a suspension block. It stays in the upper quadrant. So see if it's going to continue into the high. Again, no bias. Where's my drawing gone? Here it is. Again, I have no bias. I'm just sitting and chilling and watching it. Full TP 1 to 30. You got a 30R trade. Nice. GG's. Can't hold with the consistency rule, that's why you gotta use live accounts. The pre-market high here, this is a mitigation block high as well, so it could potentially draw down into that. Convince that live accounts are wrong. Oh. Yeah, there's discussion about it, I don't even know. Yeah. See ya. I want to see this give us a stronger change of state. That's not a great change of state delivery yet. Let's see, give us a strong one. This is technically change of state, but what's it anchored to? This one. So there's two up close candles. So I want to use a series of up close candles, and that'll be this one. I forgot to put this on, but there's first presented. It's also a breakaway gap. Yes, it's heavier. Ooh, it is. Nice bounce price range. Good sell side targets. So here's the thing again. When YM is weak, NQ is going to be strong, and ES is going to be in the middle. Real weak, in the middle, strong. Okay, I want to see this 4-hour close before making a real judgment on anything. As stated earlier. Okay, we've got the macro in 1.5 minutes. Think you should start having some heavy distribution now. Dollar's still bullish. See the difference in how NQ is trading? It's overlapping itself multiple times. This is balanced. And look at ES. It's trading away from itself, so sell side delivery. Up close candles, what are they meant to do? Well, they're meant to provide resistance for down close candles. Every time we reach into an up close candle, we should see lower prices. That's what's happening, and it's spooling, and it's going fast. It's creating displacement and inefficiencies. That's high probability price action. This, at the moment, isn't, because it's very back and forth. It's coloring over itself. Up, and then it overlaps down, and it overlaps again, up. You want to see inefficiencies created. Like this. And now we're in the 950 1010 macro. This could potentially be a little bit less. Now I am I'll give it one more candle, but I want to see this pre-market low traded towards now. This, let's see if it's an institutional strategy or not. So it's a breakaway gap, and it's an IL Fed. Okay, it's not a breakaway gap. It was at that moment, but it's just been filled in. We'll see if this can be left alone. Hopefully this can be left alone. This is also a bull flag, so retail's seeing this and they want to buy it. They're looking at this, it's accumulating above an old high. They're entering buys here, they're entering buys here, and it's just slammed them out of their positions. See if it wants to keep engineering the sentiment of it being a bull flag and then retail will get behind it, or if it's just using this as their stop out level, slams to the high. We'll see. Yeah, it's not BPO. Chop, 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 chop. There's nothing to predict here right now. Just gotta wait. 50-50 zone. Time to just wait. It's half the job. Volume imbalance. Coming close to the 4-hour closing price. Let's see what it wants to do there. Boring. Gonna take this off. It's no longer necessary information. You should not be trying to trade this now, by the way. Just sit on your hands and wait. Okay, since it's reached its balanced price range on ES, you can combine this with optimal trade entry retracement levels, like, well, the main one, 70.5%, from this impulse swing high to the end of that swing, optimal trade entry level. And if it closes above 79%, and that's the balanced price range level, then it's probably just going to run all the way through. We also have 70.5%. I'll put these on the right. 62%, 70.5%, and then 79. If it closes above, because this is the first level that's aligned with the balanced price range. Overlapping delivery of buy side delivery and sell side delivery. That overlap creates a balanced price range, because the first level that aligns with that in the ultimate trade entry fib is 79%. If we can close above 79, generally, this is similar to market maker model logic recently introduced by ICT. Well, not recently, but recently reiterated, not introduced. It's the same logic here, because what is this? This is a market maker model. Here's our high. It's distributing lower. It's reversing below liquidity inside a BISI, and then here's our lowest buy, running higher and higher. Still hasn't closed above 79%. Oh, Nasdaq took the high. Which means ES doesn't need to do it anymore. But it can. Okay, it's closed above the 2 p.m. High on the 21st of November, Friday, which was just the last trading day. And it's in the SIBI now, on the bearish order book. We'll see how we can work within this range. We'll see if it shows us a willingness to go lower or not. This SIBI here. BPR. Beginning of the macro is a low, which also trades into the first presented fair value gap. That's probably random. Another suspension block, I'm not going to mark it out yet, unless it becomes an inversion. I'm not going to look at this anymore. There's nothing interesting here at the moment. Not yet. Wow. $10 a.m. first presented fair value gap. That's a bullet fair value gap. It's also a suspension block. So if it's going to continue, it should just use that. slow Monday morning. No high impact news. Sometimes it's just like this. Coming on to the end of the macro now. Almost. Nice. Nice. Yes, did take the high, following the logic that we mentioned. YM fails to do so. This mitigation block, before it acts as a supporting level, what does it act as? Drawn liquidity. Because anyone who's in positions that are being run against, so they're in sells because it consolidates it, this is accumulating orders on both sides of the market. It's not just buy orders. The retail sentiment may majority be it's a bull flag, want to buy it up, but what's also happening is running down, people are chasing it. It's displacing down here. Look, inefficiencies. It's being sold heavily. What does that mean? People entering sell positions. And if it's running against those sell positions, they're not using a hard stop necessarily. And if they're not using a hard stop, they want to take their positions off or mitigate their positions at around break even or just in less loss than they were in. So if they're selling it here, it trades up against them. They're technically classed as scared money. When it trades back down into it, what do they want to do? They want to take the position off and be, less of a loss than they would have normally had. That's how a mitigation block works. So that in and of itself can act as a draw before it acts as a supporting level. Generally, I actually prefer them as a draw on liquidity than a support or resistance level because it's just good in my opinion. Weren't you at 70 subs last week? Nope. I've been at 400 for like a month, I don't know. I probably got like 200 doing the silver bullet mentorship and then I stopped. Yeah. False info. It's not false info. It's real info. Why do I remember you cleared at 70? I don't know. I have no idea. Last time I had 70 subs, well, the time I had 70 subs was probably like June, July. I mean, I got 70 subs in the first week of this channel. Just because I've read it. Here's that mitigation block. These Mondays 8:30 news really do some crazy shit at 9:30. Huh? What are you talking about? There's no news today. There was no news at 8:30 today. Yeah, it's tomorrow that has news. Today's no news. Tomorrow, PMI. I think. I'm pretty sure it's PMI. Yeah, look. PPI tomorrow. Nothing today. Boring. What's ICT talking about in his stream? Because there's not that much to talk about here. It's probably like making fun of Wyckoff. Bush order book. You looking for short? Nah, I'm not looking for anything on neutral. He's talking about his book. He said multiple times that the book isn't even going to be new stuff. It's just like he's already taught the book content in like previous lectures on his YouTube channel. Or a quick long. No, I'm not looking for anything. Man. Like this isn't high probability to me. I'm not saying you can't trade it, but why would you want to? It's too slow. It can go against you right now without really any great reason, no matter which side of the market you're on. So, nah. He was reiterating that. See that? I am ICT. I'm so bored. It's meant to be taking a break until February, but it's tweeting every day. Today's live streaming. I don't think he knows what break means. What's the dollar doing? Still looks good to rally higher. Mm-hmm. Euro dollar bearish. Pound dollar still bearish. Heavy distribution low. That's a classic sell day. So it's this. My long institutional order flow continuous model formed entry at 913 and stop loss was at 907 low. It was late U pairs. They're not U pairs. Well, actually, yeah, at the moment they are kind of U. Not gonna lie, Nasdaq. I mean, all the indices have been way cleaner than Forex recently, but still cooling Forex. Like, still predicting it lower. Because dollar's very obviously bullish at the moment, in my opinion. Pulled all that. And it's been consolidating around here, which is slowing down the other assets, annoyingly. There's nothing to trade here. Honestly, I would wait. Probably just come back at PM. Maybe 10:30 we'll have something, but like I wouldn't look for any type of sustained run because this is balanced and high resistance to break through, and there's not really that many great upside targets. Plus, I think we're still going to be bearish weekly basis, and if Monday's already run higher, then it just sets the stage for Tuesday to be a lower day, meaning we'll probably get a little bit of consolidation for the rest of the morning session, and PM should have, even lunch today should be good, but PM should be the main session you want to trade. Now I look at your chart, 0.25 really means still under high perfectly for break and long. This is 4-hour CB, so I don't understand where you would break and long from. This is all it's measuring, CB. Treat like resistance. PM mods. It does. You under Bitcoin? No, I don't do Bitcoin. No. I don't even have any crypto anymore. I remember ICT said, maybe it was October, he wants to see it explore below 100,000. No, he wanted it lower in October. Oh yeah, I've got some analysis on it. and he recently said Bitcoin should have an exploration below 100,000. He said that like here, I think. Is the stream freezing or is it my Wi-Fi? It's your Wi-Fi, the stream's fine. It says there's not been any buffering on my end, so it's yours. Yeah, let's take a look at this actually, because there's nothing on Nasdaq right now. The thing with crypto is it can get held up for quite a while and then have nice rounds. Total soup on an intermediate term high, breaks lower, retraces, doesn't bridge the like that. Institutional flow, breakaway gap. Where did this stop? I have zero interest in crypto ever. I'm never trading this. Maybe swing trading it can work, but intraday, no way. No way. I look at gold sometimes. Sometimes I trade it as well. We're very caught up inside this here. You can just very easily see the fight between the different stakeholders in the market. Lots of time being spent in it, which just gears us up for an explosive move once we leave the gap. Either way, I would probably see it being a sustained run. Bullish on gold for 2026. Definitely. Gold is good. Gold is good. I think, you know, especially when it's just having its one-sided rallies, it's so easy to just get the bias every day, every day, every day. Just be bullish. Just be bullish. Classic buy day, get the entire daily range, or just buy it at the midnight, 20% of the last 5 average daily range. Tack that on to midnight, buy it there, hold it for the daily range until like 4:14, and you've got most of the daily range and the bias. You can just default to it's running higher, bullish. Yeah. With gold, it's like if the world's currencies aren't doing very well, where's that money flowing? It's going into commodities like precious metals, and it's usually the main ones, obviously gold. It's really easy, like economically, to just predict gold. It's gonna go higher, always, always. It can be tricky intraday though if you're trying to do like very small scalps. It's easier if you just look at more of a higher time frame perspective and then just align with it rather than trying to scalp each like hour. Or you can do that on the Nasdaq. Trying to do it on gold is just like it's just not effective. Day trading gold's the man, in my opinion. Still nothing. You do not want to be in this market, by the way. See you soon, Otaku. Yeah, I like that. Don't forget price. You are right. Never forget those. Stick around to lunch macro. No way. No way. 20 more minutes of watching nothing? Nah. Maybe I'll, maybe not, I don't know. I was thinking maybe I'll do it in Discord. No, I got a good training today. Okay, this isn't anything you want to trade, just, take the computer off, come back at PM, and... Wait, sorry, my door knocked. Okay, back. If I was you, I would probably just take the chart off, come back at lunch or PM. Maybe you can trade lunch macro into these relatively close. This one specifically. There's nothing here that I would want to even try and predict or trade or anything. So I'm gonna end the stream now. I will come back with a PM, not on YouTube but in Discord. So if you've watched, thank you for watching. If you haven't liked the stream, like the stream, and I'll see you in Discord later on. Goodbye.